MoonPay has just launched a major new feature that could put Solana staking in every crypto user's hands. According to Crypto.news, MoonPay rolled out liquid staking for Solana SOL on July 23rd to 24th, offering up to 8.49% AP yield with no lockup and just a $1 minimum stake across more than 100 countries. Source: Crypto.news, Cointelegraph. Instead of traditional staking, where your crypto is locked up, MoonPay issues a new token called MPSOL when you stake. Rewards accumulate every 2 days, and you can unstake anytime so your Solana stays flexible and liquid. Source: Cointelegraph. MoonPay aims to simplify DeFi by making staking feel like a traditional savings account, but backed by blockchain returns. CEO Ivan Soto says, "It's about removing the barriers that keep everyday people from earning on-chain rewards." Source: Cointribune. Why this matters now? Asterisk. In April 2025, Solana briefly surpassed Ethereum in total staked value, reaching about $53.9 billion versus $53.7 billion. Solana staking yields hover around 8.3% compared to 3.2% on Ethereum. That yield gap is attracting huge interest. Source: Cointribune. Asterisk. MoonPay enters a competitive ecosystem that already includes platforms like Marinade and Jito. However, its simple user interface and low entry threshold aim to attract retail users and newcomers, not just DeFi experts. Source: Ainvest. Asterisk. Institutional demand is growing too. The Rex Osprey Solana Plus staking ETF debuted on CBO in July, drawing more than $33 million in volume and $12 million in inflows, signaling growing investor appetite for staking exposure. Source: Crypto.news. MoonPay also obtained a BitLicense from New York regulators, expanding its ability to serve U.S. users excluding New York itself, while intending to remain compliant globally. Source: Ainvest. What you need to know. Asterisk. Rate: around 8.49% AP, with rewards every 48 hours. Asterisk. Minimum: $1 of SOL. Asterisk. Flexibility: no lockup. You can unstake at any time. Asterisk. Token model: you receive MPSOL, which retains liquidity and can be used in DeFi. Asterisk. Charge: MoonPay takes around 1% commission on staking rewards, which is included in the displayed AP. Sources: Crypto.news, Ainvest, Brave New Coin, support.moonpay.com. Why it matters to investors. MoonPay's staking launch lowers the barrier to crypto yield for casual users. You don't need to understand validators or staking protocols, you just stake through a simple app. The combination of high yield, liquidity, and global availability positions this as one of the most user-friendly Solana staking options ever released. Of course, there are risks. Yield can fluctuate based on network activity and fees. Smart contract risk, validator performance, and regulatory changes in excluded regions remain considerations. But for users seeking easy, passive income from Solana, MoonPay's MSOL could deliver. We'll be watching to see how MPSOL is adopted and whether MoonPay expands staking to more coins or deeper markets right here on Cryptozard News Today. Bitcoin and Ethereum grab headlines, but XRP is quietly rallying and analysts are sounding bullish on its future. A recent Yahoo Finance feature suggests XRP could hit $15.65 by 2030 under strong market conditions. Yahoo Finance, The Economic Times. Other forecasts are also positioning Ripple's native token for significant gains if current trends continue. So, what's fueling this optimism? 1. Ripple's growing real-world use cases. Ripple has processed over $70 billion in cross-border payments to date using XRP. Institutional adoption and global expansion into 90-plus payout markets are boosting confidence in XRP as more than just a speculative asset. The Economic Times, Yahoo Finance 2. Regulatory tailwinds, speculation about favorable U.S. crypto policy, especially potential relief for Ripple's SEC case, has opened the door to forecasts ranging from $5 to as high as $15 in the medium term. Barron's 3. Technical momentum. Analysts spotted bullish patterns like triangle breakouts, pointing to targets between $4 and $15, depending on volume, market sentiment, and ETF developments. Yahoo Finance, short-term outlook next few weeks. XRP has been testing resistance around $3.60 to $3.65, a close above that could prompt a retest toward the $3.84 local high, while a drop below $3.10 to $2.90 may signal a short-term correction. The Economic Times Midterm Outlook End of 2025. If Ripple continues to expand payments use and our LUSD stablecoin adoption spreads, analysts see realistic targets of $4 to $5 by year-end. Bullish cases even put it between $5 and $7 assuming institutional and regulatory catalysts align. Yahoo Finance Long-Term Outlook 2026 to 2030. Projections diverge widely here. Some predict $4 to $6 by 2028. Others see $12 to $15 or more by 2030, driven by global tokenization, institutional buy-in, and Ripple's stablecoin expansion. The Economic Times Factors to watch. Asterisk. Ripple's legal standing and SEC developments. Asterisk. Growth and adoption of our LUSD stablecoin. Asterisk. Institutional ETF exposure to XRP. Asterisk. Market sentiment, bull cycles and altcoin rotations. Bottom line. XRP is currently range-bound between $3.10 and $3.65, but if legal clarity and adoption accelerate, the token could move toward $5 plus. Longer term, price targets from $6 to $15 are on the table, though volatility remains high and regulatory risks persist. We'll keep charting XRP's path and delivering market insight right here on Cryptozard News today. Let me know if you'd like this split into scenes for easy CapCut editing. With XRP rallying and institutional interest growing, investors are asking, how much XRP do you really need to retire comfortably in 5 years? According to a recent report from Crypto.news, experts are using projected price targets to estimate just that, making XRP a potential early retirement strategy. Source: Crypto.news. Retirement breakdowns by goal. Target: $500,000. Assuming XRP reaches $16.82 in 2030, you would need around 29,700 XRP today, costing approximately $96,300 at current prices. Source: Crypto.news. Target: $1 million. That doubles the figure. You'd need about 60,000 XRP, with a cost depending on today's rate. Target: $5 million. This requires about 147,000 XRP, a sizable portfolio, but potentially attainable if price forecasts hold. Source: Crypto.news. What to know? Asterisk. The central forecast relies on a $16.82 XRP price in 5 years, a 400% plus rise from current levels. Asterisk. If XRP reaches just $5 instead, investors would need many more tokens to hit their retirement goal. Asterisk. These scenarios are highly sensitive to XRP's future price, adoption, regulatory clarity, and ETF developments. Does this make sense? If you're an XRP believer tracking its enterprise utility, regulatory milestones, and pro-investment sentiment, these figures offer a tangible goal for long-term wealth building. But critics warn, regulatory shifts, competing blockchain networks, and market volatility could derail such projections. As always, diversification and risk management matter. Bottom line. XRP might not be a magic ticket, but if its bullish forecast materializes, relatively modest token holdings today could yield life-changing returns by 2030. We'll continue to track XRP's price action, legal progress, and ETF developments, and bring you updates right here on Cryptozard News today. Let me know if you want it trimmed to a specific duration for voiceover timing or subtitles. Bitcoin and Ethereum often steal the headlines, but XRP is quietly making bold price predictions for 2025 and beyond. According to Yahoo Finance, some analysts believe that if growth continues, XRP could soar as high as $15.65 by 2030. Source: Yahoo Finance. How experts forecast XRP's path, near term by end of 2025. With momentum building behind spot XRP ETFs, institutional interest, and Ripple's expanding payment network across 90-plus global markets, XRP may reclaim its former all-time high around $4. Street analysts suggest a potential 60% rally toward for $7 in the coming months. Source: Yahoo Finance, midterm 2026 to 2028. Looking ahead, large firms like Standard Chartered forecast XRP reaching $12.50 by 2028, a dramatic jump that could place it in the top tier of crypto market caps. Source: Yahoo Finance, long-term by 2030. Under bull case assumptions, driven by regulatory clarity, global use of XRPL stablecoins, and institutional adoption, XRP's price could climb to around $15.65. Source: Yahoo Finance. Key drivers shaping these predictions. 1. Regulatory breakthroughs. XRP's legal battles, especially ongoing SEC developments, could invite renewed capital if regulatory clarity and ETF approvals arrive. 2. Real-world utility. With over $70 billion processed globally through Ripple, XRP is gaining traction as a payment rail. Continued corporate and institutional partnerships may strengthen fundamentals. Source: Yahoo Finance. 3. Market sentiment and technicals. Bullish technical patterns, including breakout charts and low float pressure, add fuel to the upside case. Potential catalysts include ETF listings, broader institutional allocation, and coordinated crypto cycles. What could derail these targets? Weak regulatory outcomes or renewed legal restrictions in the US? Slowdown in institutional adoption or lack of ETF progress? Broader crypto downturn led by macro volatility or risk aversion? Bottom line: if Ripple continues executing on its product roadmap, regulatory clarity, and payments integration, XRP's future could be brighter than many expect. Targets range from $4 in the near term to $12 to $15 by the end of the decade. But investors should weigh price projections with caution and only consider risk-managed strategies. We'll keep one eye on chart movements, legal updates, and market momentum, right here on Cryptozard News Today. Bitcoin dominance may be peaking, but the meme coin race is heating up and three names are standing out: Pepe, Pengu, and Bonk. Each one claims upside potential in 2025, but which coin really has the momentum to lead the pack? PEPE hype without substance. PEPE remains a viral favorite. Crypto news models project Pepe prices ranging from $0.0001 to $0.0002 to $1, with bullish stretch targets hitting $0.0002 to $2 to $0.0033 by year-end. But there's a catch: these moves are still sentiment-driven and highly volatile. If visibility fades, prices could collapse towards $0.000009. Pengu, Solana's NFT meme play. Pudgy Penguin's token Pengu has jumped 120% in just 1 week, now trading near $0.032 with a $2 billion plus market cap. Analysts suggest a short-term target of $0.045 to 6 cents, possibly reaching 20% if it mirrors PEPE's breakout. Whale inflows and ETF buzz are fueling this momentum. Bonky still strong but losing ground. Bonk, Solana's original meme coin, holds a loyal community, but forecasts are cautious. Price projections range from $0.000 to $3 to $0.000 for $5, with many expecting modest upside or even a potential dip toward the lower range in the near term. Recent momentum appears to favor newer entrants. Verdict: who can win the 2025 meme coin battle? Pepe, loud, volatile, and driven by hype. Breakout possible, but so is a collapse. Pengu, backed by NFT heritage and Solana reputation. Whale activity and ETF attention make it a serious contender. Bonk, still relevant but lacks the explosive upside seen in its younger peers. Watch these catalysts: exchange news, listings, or de-risking announcements like seed tag removals can lift tokens quickly. Binance recently removed risk labels on Pepe, Bonk, and Pengu, sending all three higher. Whale accumulation and volume spikes can precede big moves. Narrative shifts: projects with utility, like Remitix's payment platform, could steal meme coin dominance if attention moves toward substance. Final thoughts: when pump meets story, meme coin magic happens, but it doesn't last forever. If you're watching the meme coin market, Pengu currently offers the most structural upside while Pepe remains highly speculative and Bonk plays catch-up. We'll keep tracking how these meme plays evolve and whether utility tokens eventually steal the spotlight right here on Cryptozard News today. PayPal is making one of the biggest moves yet to bring crypto into everyday commerce. In a new rollout called Pay with Crypto, the company is helping merchants accept over 100 cryptocurrencies, make near-instant settlements, and cut international transaction fees by up to 90%. Source: PayPal Newsroom. Here's how it works. Businesses can now accept Bitcoin, Ethereum, stablecoins like USDT or USDC, and even PYUSD, PayPal's own stablecoin, from wallets like MetaMask, Coinbase, Binance, Kraken, Phantom, OKX, and more. Source: PayPal Newsroom. Crypto is immediately converted to fiat or PUSD, ensuring merchants avoid volatility and receive funds instantly. Source: Invest. The transaction rate is just 0.99% compared to traditional cross-border credit card fees that range from 3% to 4.4%. That translates into up to 90% in savings. Source: PR Newswire. CEO Alex Chris framed the initiative as a way to bridge global commerce gaps. He offered a snapshot: a shopper in Guatemala buying from Oklahoma. A business can accept crypto, lower fees, settle quickly, and even earn 4% interest on PYUSD balances. Source: PayPal Newsroom. This launch is part of a broader strategy that includes PayPal World, a global platform uniting digital wallets across India, UPI, Latin America, China, TenPay, the US, PayPal, and Venmo, and more. Together, these efforts aim to enable cross-border transactions for over 650 million crypto users, tapping into a $3+ trillion market. Source: PayPal Newsroom. Why this matters. 1. Huge cost savings for merchants. For small businesses dealing in multiple currencies, eliminating credit card surcharges could significantly boost profits. 2. Massive market access. US businesses can now tap into a global audience of crypto users without needing technical crypto infrastructure. 3. Stablecoin integration. Accepting and liquidating PYUSD shields merchants from crypto volatility and offers 4% annual yield on balances. Sources: PayPal Newsroom, Reuters. 4. Interoperability at scale. PayPal World allows users from digital wallet systems like UPI, Mercado Pago, and TenPay to seamlessly transact worldwide. Source: TechRadar. Caveats and risks. US users in New York are excluded until PayPal obtains state approval from the NYDFS. Source: PayPal Newsroom. PYUSD and crypto transactions lack FDIC or SIPC protection and are subject to operational, custody, and network risks. Source: PayPal Newsroom. Bottom line: PayPal is rewriting the rules of global payments. With fast settlements, low fees, integrated stablecoin options, and global wallet compatibility, Pay with Crypto could shift millions of merchants and consumers toward crypto-native commerce. We'll be watching to see how fast adoption spreads and whether this becomes the new standard for international payments. That's all for now on Cryptozard News Today. Ethereum might be closer than ever to the $10,000 milestone in 2025, and there are three powerful trends driving that dream. According to Crypto.news, here's why the 1OK Ethereum rally isn't just hype, it's becoming a serious narrative. Source: Crypto.news. 1. Institutional demand from corporate treasuries. Ethereum is now seeing the same kind of demand pattern that helped fuel Bitcoin's rise, but this time, it's from public companies holding ETH on their balance sheets. Currently, about 1% of Ethereum's circulating supply is held by 11 major firms. But Standard Chartered projects that could rise to 10%, meaning institutional holders and their wallets, could significantly reduce available supply. Source: Crypto.news. 2. Treasuries shifting from mining to ETH reserves. Companies like Bitmine and BTCS are shifting from Bitcoin mining to stockpiling Ethereum as treasury reserves. That demand crunch has had a major impact on ETH's price and position among institutional investors. Source: Crypto.news. 3. Bullish analyst sentiment and ETF flows. Rising spot Ethereum ETF inflows are accelerating by pressure, often exceeding Bitcoin in recent weeks. Major banks and analysts, including those at Standard Chartered, believe this capital momentum could drive ETH into a new bull market. Source: Crypto.news. Why this matters and what to watch. Ether has outperformed Bitcoin and Solana recently, and corporate ETH treasuries are fueling that outperformance. Source: Crypto.news. ETH's exchange reserves are falling, meaning less supply is available to sell short-term. Source: Daily Forex. Analyst patterns and technical setups are creating fresh optimism, particularly targeting the $5,000 to $10,000 range if momentum holds. Sources: Crypto.news, Daily Forex. That said, reaching 10,000 is still speculative and depends on regulatory clarity, ETF approvals, and continued corporate accumulation. Bottom line: Ethereum's trajectory remains bullish and possibly poised for a historic breakout. If corporate adoption continues, ETF flows grow, and the network scales with upgrades, the path to $10,000 isn't just possible, it may already be underway. We'll keep tracking institutional moves, ETF inflows, and on-chain data updates right here on Cryptozard News Today.